If you own an LLC and you're confused about how to pay yourself, then you need to watch this video. The way you pay yourself as an LLC owner can literally save you thousands of dollars in taxes or cost you thousands of dollars in taxes. It all depends on how you structure your payments. So today, I'm going to break down everything you need to know about paying yourself as an LLC owner in 2025, and I'm going to show you the most tax-advantaged way to do it. Without further ado, let's dive in. Before we jump in, quick disclaimer. I'm not a tax advisor. This is not financial advice. Do your own research. This video is for educational purposes. Alright guys, let's talk about the LLC payment dilemma. One of the most common questions I get from new LLC owners is, Philip, how do I actually pay myself from my business? And the answer is, it depends on how your LLC is taxed. A lot of people don't realize this, but an LLC is not actually a tax classification. An LLC is a legal structure. For tax purposes, your LLC can be taxed as a sole proprietorship, a partnership, an S-corporation, or even a C-corporation. And the way your LLC is taxed determines how you can pay yourself. This is something that confuses a ton of business owners. So pay close attention, because getting this wrong could cost you a fortune in taxes or get you in trouble with the IRS. Let me break down the 4 different ways your LLC can be taxed and how you pay yourself in each scenario. First up, let's talk about single-member LLCs taxed as sole proprietorships. If you're the only owner of your LLC and you haven't elected a different tax treatment, then by default, your LLC is taxed as a sole proprietorship. This is what's called a disregarded entity. The IRS basically ignores your LLC for tax purposes and treats all the income as your personal income. So how do you pay yourself in this situation? You don't pay yourself a salary. Instead, you take what's called an owner's draw. An owner's draw is simply you transferring money from your business bank account to your personal bank account. There's no payroll involved, no W-2, and no withholding. You just move the money whenever you need it. Now here's what you need to know about taxes. All of your business profit is subject to self-employment tax, which is 15.3%. This covers your Social Security and Medicare taxes. You'll also pay income tax on your profits. So even if you leave money in the business account, you still owe taxes on it because the IRS considers all the profit as your personal income. Now let's talk about multi-member LLCs taxed as partnerships. If your LLC has 2 or more owners and you haven't elected a different tax treatment, then your LLC is taxed as a partnership by default. In a partnership, each owner receives a share of the profits based on their ownership percentage or based on whatever agreement you have in your operating agreement. You also take owner's draws, not salaries. Each partner reports their share of the profit on their personal tax return using a Schedule K-1. And just like with sole proprietorships, all of your share of the profit is subject to self-employment tax and income tax. Philip, what if I want to save money on self-employment taxes? Great question. This is where things get interesting. If you're paying a lot in self-employment taxes, you might want to consider electing S-corporation tax status for your LLC. Let's talk about LLCs taxed as S-corporations. This is where you can start to save some serious money on taxes. When your LLC elects to be taxed as an S-corp, the IRS requires you to pay yourself a reasonable salary if you're actively working in the business. This is a W-2% salary with payroll taxes withheld just like any other employee. Now here's the key benefit. After you pay yourself that reasonable salary, any additional profit you take out of the business can be taken as distributions. And distributions are not subject to self-employment tax. Let me give you an example to show you how powerful this can be. Let's say your LLC makes $100,000 in profit for the year. If you're taxed as a sole proprietorship, you'd pay self-employment tax on the full $100,000. That's $15,300 in self-employment taxes alone. But if you elect S-corp status, you could pay yourself a reasonable salary of, let's say, $60,000. You'd pay payroll taxes on that $60,000. Then you could take the remaining $40,000 as a distribution, and that $40,000 would not be subject to the 15.3% self-employment tax. That's a savings of over $6,000 per year. Now, I want you to be careful here. The IRS requires that your salary be reasonable. You can't just pay yourself $10,000 and take $90,000 as distributions. The IRS will come after you for that. Your salary needs to be comparable to what someone doing your job would earn in the market. If you try to game the system, you could face penalties and back taxes. Philip, what about C corporation status? Can I elect that for my LLC? Yes, you can elect for your LLC to be taxed as a C corporation, but I don't recommend this for most small business owners. C corp face double taxation. The corporation pays taxes on its profits, and then you pay taxes again when you take money out as dividends or salary. This structure is really only beneficial for very large businesses or businesses that are planning to go public. For most LLC owners, you're going to want to stick with sole proprietorship, partnership, or S-corp status. Now let's talk about how to choose the right structure for you. Here's what I recommend. If you're just starting out and your business is making less than $40,000 to $50,000 per year, staying as a sole proprietorship or partnership is probably fine. The tax savings from electing S-corp status won't be worth the extra paperwork and payroll costs. But once your business is consistently making more than $60,000 to $80,000 per year, you should seriously consider electing S-corp status. The self-employment tax savings can be substantial. You'll also want to work with a CPA or tax advisor to make sure you're setting your salary at the right level and handling all the payroll requirements correctly. Here are some action steps you can take right now. First, figure out how your LLC is currently taxed. Check your tax returns or ask your accountant. Second, calculate how much you're paying in self-employment taxes. If it's a significant amount, run the numbers to see if the S-corp election makes sense. Third, if you decide to elect S-corp status, you'll need to file Form 2553 with the IRS. And fourth, set up payroll if you're going to be an S-corp. You'll need to run payroll for yourself and withhold the appropriate taxes. Here's my final conclusion. How you pay yourself as an LLC owner depends entirely on how your LLC is taxed. If you're a sole proprietor or partner, you take owner's draws and pay self-employment tax on all your profits. If you elect S-corp status, you can save thousands in self-employment taxes by splitting your income between salary and distributions. The key is to make sure you're paying yourself a reasonable salary if you go the S-corp route. And always work with a qualified tax professional to make sure you're doing this correctly. The IRS does not play around when it comes to payroll taxes and S-corp compliance. Now, before you go, I want to share something with you. Forming an LLC yourself is very stressful. And as someone who has formed LLCs for most of my businesses, I won't recommend the DIY approach. Instead, use professional LLC services. All you need to do is avoid overpaying for any services. Make sure to use our LLC cost calculator. The link is inside the video description. This will help you compare prices and find the best service for your needs without getting ripped off. That's all I've got for today's video, guys. As always, don't forget to like, comment, and subscribe. We're growing this channel, and we're just doing everything we can to give you more information that will help you build a tax-free life. Thank you so much for tuning in. I'll see you in the next video.